Hey everybody, Kurt Henry here, mortgage broker at the Mortgage Center. We're your go-to mortgage broker in the Durham region, and this is a weekly mortgage market update just to let you know what's going on in the mortgage market. So we know the Bank of Canada increased the rate by 0.5% yesterday. That will have an impact on variable rate mortgages and lines of credit, a direct impact that is, by increasing those rates by 0.5%. Now, the market was prepared for an increase of 0.75%. The Bank of Canada only increased by 0.5%. So some analysts would critique the Bank of Canada on that, saying that if by them not doing an increase of 0.75%, it might mean higher rates for longer. Of course, time will tell on that. So we know the inflation rate, is 6.9% overall inflation. That is, a few months ago it was over 8%. So it's good that overall inflation is coming down. It's core inflation though that is the concern, because core inflation is if you take overall inflation and you take out energy and food, then you're left with core inflation, and core inflation is a little more sticky. So it's around 5.2% or so. A few months ago, it wasn't too far off from that. So because of that, and because of the bank, we know the Bank of Canada is basically saying that they're going to continue increasing rates. We know that we're not out of the woods yet as far as these rate increases go. The next Bank of Canada rate announcement is on December 7th, and after that, there's one on January 25th and another one on March 8th. So every year, the Bank of Canada has 8 pre-scheduled rate announcements, and those are the dates for the next few announcements. So where does that leave you? Well, if you have a renewal coming up in the next year, definitely better to talk to us about that sooner than later. If you're thinking about consolidating some debt or getting your cash flow in a better position, again, best to talk to us sooner than later about that. If you're thinking about purchasing a house, the good news is that just because the way the stress test is calculated, which determines how much you qualify to purchase a place, it's possible that the deterioration in affordability over the last 6 months might not be the same going forward, just because of the way the stress test is calculated. So in other words, if somebody qualifies for a lot less today than what they used to qualify for 6 months ago, it's possible that the amount that they qualify for going forward might not decrease as much because of the way the stress test is calculated. So if you have any questions on that, feel free to reach out. And then, if you're in a variable rate mortgage and you're thinking about locking into a fixed rate, again, best to check with your current lender on what the lock-in rate is. Let us know what they say, and then we can give you some thoughts on if you should do the lock-in with the current lender, or if you should look at other options. So if you have any questions at all or need anything, feel free to reach out, and we're happy to help. Thanks, everybody.